Okay guys, welcome back. Welcome to FX Beethoven First Argo Decoded. My name is JD. Today we are going to talk about manipulation in the time frame strength for direction, guys, and the focus is self-negation. In the last video we talked much about time frame strength and manipulation, and we talked about negation. This time I want to go deep and tell you more about self-negation, because I've seen some of you asking the same question: what is self-negation? What is self-negation? And I created a post in my Telegram channel to vote whether you need this video or not, and the majority of you voted yes, so that's why I decided to release this video. So without wasting our time, guys, let's see what you are going to focus on in this video. So the topic is understanding self-negation, manipulation, and we'll talk about what is negation, definition, and examples. After that, we focus on what is self-negation. Of course, we talk about, of course, we will see the true definition, and then we'll see examples. So what is negation? So before you continue, guys, you have to understand negation. I know we talked about that in the last video, but let's talk about it again. So in the previous video, we talked about manipulation concept and the time frame strength. We talked about FU and entity FU, and the term negation was used a lot. And I have got some questions from you asking deeper understanding of negation and self-negation. So here I'm showing you candles of manipulation, FU and the entity FU. This is the starting point of understanding everything. So before we say negation, we must have a manipulation forming. So negation forms when you have two manipulations. So I'm just showing you FU and the entity FU on the left side. So the term negation was used to mean manipulation against a previously revealed one, even after many candles in the previous direction were generated. So this is what I was talking about negation in the previous video, just using many candles. But basically, when we are talking about manipulation, we don't use many candles, because remember, we are focusing on the time frame strength. And if you are focusing on the time frame strength, we try very hard to avoid so many candles, right? Because it's all about one candlestick against another to identify true direction. So this time we focus on free candlesticks. This means we focus on free candlestick manipulation warfare to define what? To define negation. So the candlestick you are seeing here, we have one candle, two candles, as you can see. Is one. So guys, we have one candle. You have one candle here. This is two candle. This is a second candle. So we need the third candle, because we focus on free candlestick manipulation to define what we call negation. This one candle, the second candle. What is the third candle? So it's what we are going to talk about. It's what we are going to talk about. Now, how to correctly mark the chart. When marking the chart, if manipulation was generated, it's either FU or entity FU. This is the beginning of everything. If manipulation was generated, it's either FU or entity FU. So example, when the price is heading to target liquidity to the downside and it succeeds, price may continue to drop, creating more and more candles. If another manipulation forms after more candles were generated, that manipulation is marked as either FU or entity FU. So I hope you understand. So if you see a manipulation forming at the beginning and you see more candles are being generated and you see another manipulation forming to the upside, that manipulation is also FU or entity FU. It's not a negation, because remember we talked about negation. We said the negation is all about three candlesticks. So if you see many candlesticks are forming and you see another manipulation, just mark it as a normal FU or entity FU. So here, for example, we have FU, then you have this one candle, this second candle, then this is third candle, fourth candle. So Remember, we focus on if negation is not formed here, then another manipulation that will form will be marked as a normal manipulation, like antoji FU or FU. As you can see here, this is antoji FU. It's not negation. This is not negating this one, because this one may be generated for a short time pullback to continue direction to the downside. So you cannot relate it to this one. So first of all, this can generate a short-term direction to come somewhere before we continue original trend. So it's not about negation. It's about normal pullback that is possibly forming. So understand that. Now, through definition, a negation is an entity FU or FU that forms directly against previously generated manipulation. Hope you understand. A negation is an entity FU or FU that forms directly against previously generated manipulation. So if you have this FU, as you can see, and you see another, the third candle, remember we talk about the three candles, 1, 2, 1, 2. If the third candle manipulates this level and reverses, that's what we call a true negation. As you can see here, we have one candle, second candle, then the third candle here created another entity FU. So this is FU, this is another entity, this is entity FU that forms to the upside. This was formed to the downside, this one is formed to the upside. So meaning it is manipulation forming to go higher, negating this one. So as you can see, you have three candlesticks. So 1, 2, 3. So this is a true negation. Is directly negating this FU. This FU is being negated by this entity FU. So this is what you call true negation. Hope you understand, guys. Hope it's clear. So if you say negation, always focus on what? Focus on three candlesticks. If it's more than 3 candlesticks, take it as a normal manipulation. Hope it's clear and understandable. So how to correctly mark the chart from here? As you can see, we have entity FU. As you can see on that side, this is entity FU. This is FU. This is entity FU. So how to correctly mark it? Instead of saying FU, entity FU, we simply say negation. We simply say negation, and this is very crucial. This is very crucial, guys. Do not take it simple. It plays a big role in understanding more concepts like self-negation. So if you succeed in marking this one, it will help you a lot, and also marking it as a negation instead of entity FU helps you to really understand what is going on. It just conveys the message. You understand you are negating this previously formed FU. So that is the key. Hope you get it. Now, what is negation? We are still talking about the negation. So through definition, we are still talking about the negation, guys. So this is FU. This is a negation. This is the correct way of marking the chart. This is FU. This is another FU. This is another FU because it's closed above, right? So instead of marking this FU as this FU, and you mark this as another FU, mark it as a negation. Mark it as a negation. There is a reason. So here, this is entity FU from the beginning. Of course, you have 3 candles, 1, 2, 3. Even here you have 1, 2, 3. So this is a negation. The next direction is that you are going higher to target this high. True negation forms directly after another manipulation has ended. And if negation forms in line with higher time frame, previous manipulation origin becomes a quick liquidity target. So for example, if this is a higher time frame, assume that you have a key level here, maybe another block, then you see manipulation forming until the FU, and then you see a negation forming, then this becomes a quick liquidity. This is going to happen most of the time when a candlestick opens. Go back to the chart and check how candlestick forms during the open. You are likely to see that. Okay. Now, let's talk about self-negation. Through definition, self-negation is a manipulation followed by a negation within one single candlestick. Within one single candlestick. It's typing error. So a self-negation is a manipulation followed by a negation within one single candlestick. So if you understand the meaning of self, that means a candle negates itself. Hope you understand. So in a candlestick performs a manipulation to a certain direction, but later concludes its journey, negating that initial manipulation. So a candlestick performs a manipulation to a certain direction, but later concludes its journey, negating that initial manipulation, where it starts from. That's the true definition of self-negation for those who did not understand what I meant when I said self-negation. This is it. So bullish negation is when a candlestick performs a manipulation to go down and later closes with a bullish negation. So it negates itself. It is going down with manipulation, but when it closes as a bullish negation. So that's it, what we call a bullish self-negation candle. So here, a bearish negation is when a candle performs a manipulation to go up and later closes with a bearish negation. A bearish negation. Hope you understand that. So this is what we call a self-negation. Here's an example. Assume this FU forms and the candlestick is still running. So we have the first candle forming, we have the second candle. Now, FU is formed. Remember, the candle is still running. This one is still running. Assume this candle is still running, right? However, as of now, it looks like an FU, but it hasn't yet closed. It is still running. So if it is still running, so you have to wait. So after a certain time, after sometimes it forms like this. So meaning it started here. It started here as FU, then it went down, reached this level, maybe hit a key level like liquidity, fair value gap, or whatever, and then rejects and it goes higher and manipulates the bottom. Purges the bottom, and it crosses as another manipulation to the upside. I don't know if everyone is trying to understand this. Start from here. The candlesticks here, then there is a key level around here. Then later, this candle start pushing high. It started manipulating the high. Manipulating this high, purging the liquidity, and it went down. Remember, a candlestick has liquidity on both sides, remember? Then there is liquidity resting below. Market went down. The candlestick went down and it purged this liquidity, hit a key level, and then start rejecting, and it closes here as what? It closes here as a bullish manipulation, manipulating the bottom. It starts manipulating the high, the top, and then it closes manipulating the bottom around here. Just one candlestick. One candlestick. So this is the first manipulation took place here, then the second manipulation took place here, as you can see. So self-negation is performed by two candlesticks. 1 and 2. It's performed by 2 candlesticks. So this is what we call self-negation, because the candlestick is negating itself. It is negating its own manipulation that it started from. It started from this manipulation, and then once it reached this area, it decided to negate itself. So this is what we call negation. So what do you expect now after this? You expect to go higher, to target its high, right? Its high becomes the magnet. Hope you understand that. Hope you understand that, and I hope it's simple and clear. So here, this is an example of a bullish scenario. So the candle started with a manipulation to the downside, then traded the lower. After reaching this area, the candlestick started reversing, purge this low, and it closes as a bullish manipulation. So basically the move is much more like this. So the high is taken here, market goes down, then it takes this low. So manipulation on the top, manipulation to the bottom. The next move is to go higher. So the next move is to go higher. This means if a new candlestick start, we expect a test. This manipulation will be tested. Here we have a candlestick testing that manipulation, and then we see a strong expansion forming. So this is what we call self-negation. This candlestick is negating itself. Hope you clearly understand. So this is for a bullish direction. For a bearish direction, you have a bearish candle here. The bearish candle was purged below with anti FU forming. Then the candlestick traded higher up to this area. After reaching this area, it went down and purged this low. After purging this low, as you can see, the rest was simple. The high is purged here. Then the candlestick closes as what? As another manipulation. So this is a self-negation. So until the candlestick is negating its own manipulation that it has created to the bottom. So institutions here, it's like we are going higher. They are adding money to go higher. Once they hit this liquidity, they see there is no reason to continue to go higher. They add more money to go down. So manipulation to the downside. So where is the next draw in liquidity? The next draw in liquidity is this low. The next draw on liquidity is this low. So you are waiting for a test around this area. This is your sell zone. Then to target this liquidity, this draw in liquidity. The draw in liquidity is here. So this is where we are going to target. I found a good example on one pair, GBP USD. However, if you go to the chart, you will see so many examples if you pay attention to that. So as you can see, prices start with a manipulation to the downside right here. Price is moving down. Price is moving down until here we saw a perfect anti-FU to the upside, as you can see. So meaning price institutions are adding money here to go higher, to trade higher. So after reaching this area, trading into this key level, this imbalance, what happens, the candlestick decide to reverse, purging all of these highs, and then closed again as another activity FU, or in one single candle. The difference is always one single candle. This is the whole operation is performed by one candle here. So we have one candle, two candle. So what I mean, manipulation is happening within one single candle. A candle is manipulating itself. So activity FU to the upside, then activity FU to the downside. So this is what we call self-negation. Once you see that, then you have got a clear direction. You are not going to believe that this is going to be a true stop loss. A true stop loss is going to be above here. So we are going to see market testing this zone. The next candlestick is going to test the zone. The next candlestick is going to test this zone. So this is the one testing the zone. And then we start going down, knowing that the next draw on liquidity is the first negation, the first manipulation that was negated. So a negated manipulation becomes liquidity. So this activity, this manipulation was negated, so it becomes liquidity. Was negated by this one, so it becomes a liquidity to do what? Liquidity to target. So this is a simple example. I hope with this everyone is able to understand exactly what manipulation and what self-negation is. So make sure you guys you follow us on the Telegram. Check in the video description. I have a link to my Telegram channel, and I have a link to my personal Telegram. All of official links are in the video description. Any link you find outside my video description is not valid. So make sure the official channel is found in my video description. Come and follow us there and see what we are doing. Again, next video, maybe this week, I will be talking about this area because we talked about that in the previous video about what to expect, because we are still bullish guys on this area. So I'll be doing top analysis around this area to show what we should exactly expect in the coming days. So this is it. This is FX Beethoven forever. So make sure you follow us on Twitter, FX Beethoven. Follow us on Instagram, FX Beethoven. Follow us on Telegram, FX Beethoven. So or the username is the same. 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 All links are in the video description. Again, this skill took years to master, and it took me 3 days to give you this crash course. Again, it can take you 5 seconds to subscribe and 1 minute to follow us on Telegram, X, and Instagram. So check all links in the video description and follow us there. Thank you guys. I love you. Until next time guys, good luck and good trading and happy new year guys.